Based on the historical data and forecast, Bitcoin is currently exhibiting a downtrend, particularly evident in the recent forecast prices which project a continuous decline. The RSI consistently remains below 30, indicating an oversold condition, and the price is nearing the support level of $85,200. Given this bearish outlook, I recommend a short selling strategy. Entry price should be set at $87,800, coinciding with the forecast price for November 24, 2025. To mitigate potential risks, a stop loss should be placed at $91,800, just above the recent historical support and the bottom of the Bollinger Bands. A target price of $86,000, aligned with the forecast for November 24, 2025, should be set to secure profits. To refine this strategy, we can incorporate the Bollinger Bands. The current price is trading below the lower band, reinforcing the bearish sentiment. A conservative portfolio would allocate 60% of capital to the short selling strategy described above. The remaining 40% can be held in cash, allowing for flexibility to capitalize on potential upward revisions in the forecast or a shift in market sentiment. This approach balances risk mitigation with the opportunity to profit from the anticipated downward trend in Bitcoin. Based on the historical data and forecast, Ethereum shows a declining trend. The RSI consistently below 50, especially dipping to 20 and below, indicates the asset is oversold. The forecast prices for the next week are also decreasing, suggesting continued downward pressure. The support price of $2,610 provides a floor, while the resistance of $3,790 acts as a ceiling. We will implement a short selling strategy, capitalizing on this downward trend. Our strategy involves entering a short position at $3,000, anticipating further decline. The stop loss will be set at $3,020 to limit potential losses if the price unexpectedly reverses. The initial target price is $2,940, aligning with the forecast price for November 19, 2025. If the price continues to fall, we will adjust the target price to $2,910, based on the forecast for November 20, 2025. Further downward movement could lead to a final target of $2,860, corresponding to the forecast for November 21, 2025. This strategy combines technical indicators like RSI and Bollinger Bands with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a downtrend with decreasing forecast prices. The RSI consistently remains below 50, indicating a bearish momentum, with readings often approaching the oversold level of 20. The Bollinger Bands also support this view, with the price frequently touching the lower band, suggesting potential downward pressure. Considering these factors, I recommend a short selling strategy. Entry price will be $2.17, setting a stop loss at $2.21 to protect against unexpected upward spikes. The initial target price will be $2.07, based on the forecast data. To maximize returns, I propose a tiered approach. If the price reaches the initial target of $2.07, we will secure 50% of the position and move the stop loss to the entry price of $2.17, locking in profits. For the remaining 50% of the position, we will maintain the initial stop loss of $2.21 and aim for a secondary target of $2, capitalizing on further potential downward movement. This combined strategy balances risk and reward, providing a robust approach to profit from the anticipated bearish trend of XRP. Based on the historical data and forecast, BNB demonstrates a declining trend, especially evident in the recent forecast prices. The RSI consistently remains below 50, fluctuating between 32.6 and 41.4, indicating a generally oversold condition. The Bollinger Bands show a narrowing range, suggesting increasing volatility. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We'll initiate a long position at $888, capitalizing on the potential for a short-term bounce. The stop loss will be placed at $860, just below the established support level, to mitigate potential losses if the downward trend continues. Our target price will be $924, aligning with the recent resistance level, offering a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band at $848, we will close the position and take a small profit. This will help protect against further downside risk. This strategy combines RSI and Bollinger Bands to achieve a high return. The portfolio will allocate 60% to the RSI strategy and 40% to the Bollinger Band strategy. This allocation balances the strengths of both indicators, capitalizing on oversold conditions while also managing volatility. The overall goal is to achieve a high return while minimizing risk by strategically entering, exiting, and managing positions based on technical analysis. Based on the historical data and forecast, Solana exhibits a downtrend. The recent RSI values consistently hover below 30, indicating an oversold condition. The forecast for the next week predicts a continuous decline, with prices dropping from $130 to $117. Considering these factors, I recommend a short position strategy. Enter a short position at $130 with a stop loss placed just above the recent high of $167, setting it at $168. The initial target price should be $117, aligning with the forecast low. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading below the lower band reinforces the downtrend. If the price breaks above the upper Bollinger Band, which is currently at $207, it signals a potential trend reversal, and we should close the position. If the target price of $117 is reached, consider moving the stop loss to break even at $130 to secure profits and mitigate risk. This combined RSI and Bollinger Bands approach aims to capitalize on the current downtrend while incorporating risk management techniques. Based on the historical data and forecast, TRON exhibits a sideways trend with fluctuating prices. The RSI consistently hovers around the oversold level, indicating potential buying opportunities. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible bounce. Considering this, I recommend a long position strategy. The entry price should be $0.288, coinciding with the forecast price on November 19, 2025. A stop loss should be placed at $0.284, aligning with the established support price to mitigate potential losses. The target price is set at $0.295, which is the resistance price, aiming to capitalize on a potential price increase. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, it's a strong buy signal. Conversely, when the RSI reaches 80, it's a sell signal. If the price touches the lower Bollinger Band, it indicates a potential rebound. Combining these signals with the support and resistance levels, I suggest entering a long position at $0.288, with a stop loss at $0.284 and a target price of $0.295. This blended approach leverages multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin exhibits a downtrend, as indicated by the declining closing prices and the forecast predicting further decreases. The RSI consistently hovers around the oversold territory, currently at 33.8, suggesting potential for a bounce. However, the forecast price continues to decline, hitting 0.143. The Bollinger Bands show that the price is nearing the lower band, which could indicate a potential short-term rebound. Considering these factors, I recommend a contrarian strategy, anticipating a short-term bounce before the overall downtrend resumes. My recommended strategy is to initiate a long position at $0.152. Given the oversold RSI and proximity to the lower Bollinger Band, this entry price aims to capitalize on a short-term price recovery. Set a stop loss at $0.149 to protect against the anticipated downtrend. Target a modest profit at $0.163, aligning with the recent resistance level. This strategy combines RSI and Bollinger Band signals with an awareness of the overall bearish trend. This position should be closed if the price reaches the target or stop loss. Based on the historical data and forecast, Cardano exhibits a downtrend, especially considering the recent forecast prices. The RSI consistently remains below 50, indicating prevailing selling pressure and nearing oversold territory. The Bollinger Bands show that the price has been trading near the lower band, further reinforcing the bearish sentiment. Therefore, a short selling strategy is recommended. We will initiate a short position at $0.467, placing a stop-loss order at $0.469 to protect against unexpected upward movements. The initial target price is set at $0.437, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI rises above 30 and the price touches the upper Bollinger Band, we will consider covering the short position and taking a small profit at $0.436. However, if the price breaks below the lower Bollinger Band and the RSI falls below 20, we will tighten the stop loss to $0.453 and adjust the target price to $0.423, anticipating a more substantial decline. This dynamic approach allows us to adapt to changing market conditions and optimize returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has shown a downtrend recently, with a consistent forecast of decreasing prices. The RSI consistently remained below 50, indicating a generally weak momentum. The price has been trading below the Bollinger Band's center line, further supporting the bearish outlook. Given this information, a short selling strategy is recommended. We will initiate a short position at $3,260. A stop loss will be placed at $3,300 to limit potential losses if the price unexpectedly rebounds. The initial target price is $3,100, aiming to capitalize on the predicted downward trend. To refine the strategy, we will incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 20, indicating an oversold condition, we will consider covering the short position or scaling back. When the price touches the bottom of the Bollinger Bands, we will anticipate a potential bounce and adjust the stop loss accordingly. The portfolio will be a combination of the short selling strategy and the RSI and Bollinger Bands indicators. The final target price will be $3,000 if the price continues to decline after reaching $3,100. Based on the historical data and forecast, Zcash shows a strong upward trend, consistently hitting new highs and testing the resistance level of $702. The RSI consistently above 70 indicates overbought conditions, suggesting a potential pullback is imminent, but the overall momentum remains bullish. The forecast prices continue to climb, predicting a further rise to $783. Considering these factors, I recommend a long position with an entry price of $633. A stop loss should be placed at $611, just below the recent support level, to protect against a sudden downturn. The initial target price should be $702, aligning with the established resistance. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the upper band suggests continued bullish momentum. If the price breaks above $766, the forecast high, we should adjust the target price to $783. This combined strategy leverages the RSI's overbought signal for cautious entry, the Bollinger Bands for confirmation of the trend, and support and resistance levels for risk management. The portfolio aims for high returns by capitalizing on the prevailing upward trend while mitigating potential losses through strategic stop-loss placement. Based on the historical data and forecast, Immutable exhibits a clear downtrend, particularly evident in the recent forecast prices consistently below $0.33. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands further confirm this trend, with the price frequently touching the lower band. Given this analysis, I recommend a short selling strategy. We will enter a short position at $0.351. A stop loss should be placed at $0.368 to protect against potential short-term reversals. The initial target price will be $0.32, aligning with the forecast price and the lower Bollinger Band. To refine this strategy, we will implement a dynamic target price based on the RSI. If the RSI reaches 80 during the trade, indicating an overbought condition, we will close the position and take profits at the prevailing price. Conversely, if the price touches the upper Bollinger Band, which signifies an overbought condition, we will also close the position and secure profits. This adaptive approach allows us to capitalize on both the predicted downtrend and potential short-term fluctuations, maximizing returns while managing risk effectively. This portfolio will be 80% short selling and 20% waiting to buy. Based on the historical data and forecast, Hedera shows a downtrend. The RSI consistently remains below 80, indicating it's not in an overbought condition, and dips below 30 on several days, suggesting potential oversold conditions. The forecast for the next week predicts a continued downward movement, with prices decreasing from $0.149 to $0.135. Considering these factors, I recommend a short selling strategy. The entry price should be $0.149, capitalizing on the initial downward movement in the forecast. A stop loss should be set at $0.15, just above the upper Bollinger Band to avoid being trapped in a potential upward price reversal. The target price should be $0.135, aligning with the lowest forecast price for the week. To refine this strategy, I'll incorporate the Bollinger Bands. When the price touches the upper band at $0.15, it signals a potential short entry. The stop loss will be placed slightly above the upper band at $0.15, and the target price will be the lower band, which is $0.135. This combined approach leverages both the RSI's oversold signals and the Bollinger Band's volatility indicators for a more robust trading plan. The portfolio will be 70% short selling strategy and 30% RSI strategy. Based on the historical data and forecast, Conflux shows a fluctuating trend with a recent downward movement. The support price is consistently at $0.0716, while the resistance is $0.169. The RSI indicates oversold conditions, fluctuating between 29.0 and 47.8. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential rebound. Given the forecast of decreasing prices for the next week, a cautious approach is warranted. Therefore, I propose a contrarian strategy focusing on short-term gains. My recommended strategy is to initiate a long position when the RSI dips below 30 and the price touches the bottom of the Bollinger Bands. Specifically, enter a long position at $0.0846. Set a stop-loss order at $0.072, just below the support price, to limit potential losses. The initial target price should be $0.0959, aligning with the recent resistance level. If the price reaches this target, consider moving the stop-loss to break even to protect profits. If the price continues to rise, a secondary target price of $0.1 can be set. This strategy combines RSI and Bollinger Band signals to capitalize on short-term price fluctuations while managing risk with defined stop-loss levels. Based on the historical data and forecast, TRON exhibits a sideways trend with fluctuating prices. The RSI consistently hovers around the oversold level, indicating potential buying opportunities. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible bounce. Considering this, I recommend a long position strategy. The entry price should be $0.288, coinciding with the forecast price on November 19, 2025. A stop loss should be placed at $0.284, aligning with the established support price to mitigate potential losses. The target price is set at $0.295, which is the resistance price, aiming to capitalize on a potential price increase. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, it's a strong buy signal. Conversely, when the RSI reaches 80, it's a sell signal. If the price touches the lower Bollinger Band, it indicates a potential rebound. Combining these signals with the support and resistance levels, I suggest entering a long position at $0.288, with a stop loss at $0.284 and a target price of $0.295. This blended approach leverages multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SUN token shows a slight upward trend with price fluctuations around the $0.022 mark. The RSI consistently remains below 50, indicating a generally oversold condition. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the lower band. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position when the price touches the lower Bollinger Band and the RSI is below 30. For example, if the price hits $0.0215 and the RSI drops below 30, enter a long position at $0.0215. Place a stop-loss order at $0.0213 to limit potential losses. Set a target price at $0.0228, near the resistance level, to secure profits. To optimize the portfolio, we will implement a weighted strategy. The RSI-based strategy will have a 60% weight, and the Bollinger Band strategy will have a 40% weight. This means that 60% of our capital will be allocated to the RSI-based strategy, and 40% will be allocated to the Bollinger Band strategy. The forecast data indicates a potential slight decline in the short term, but the overall trend remains positive. Therefore, we will maintain a moderately bullish stance, adjusting our positions based on real-time market conditions. This combined approach aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a fluctuating trend with support at $481 and resistance at $554. The RSI consistently hovers around the 40 to 50 range, indicating a neutral to slightly bullish sentiment. The Bollinger Bands show that the price is currently approaching the lower band, suggesting a potential oversold condition. Given this, I propose a strategy combining RSI and Bollinger Bands. We'll enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. For example, if the RSI falls to 28 and the price reaches $474, we enter a long position with an entry price of $474. Our stop loss will be set just below the lower Bollinger Band at $473, and the target price will be $500, aiming to capture a significant upward movement. To refine the portfolio, we'll incorporate support and resistance levels. If the price bounces off the support level of $481 with an RSI below 30, we'll enter a long position at $481. The stop loss will be placed at $478, and the target price will be $510. This strategy leverages the support level as a safety net while aiming for a moderate profit. The combined strategy focuses on identifying oversold conditions and capitalizing on potential rebounds, balancing risk with reward for optimal returns. The overall portfolio will be allocated 60% to the RSI and Bollinger Band strategy, and 40% to the support and resistance strategy. Based on the historical data and forecast, Uniswap exhibits a strong upward trend, particularly evident in the recent surge to $9.52. The RSI values fluctuate, but generally indicate strengthening momentum. The Bollinger Bands have widened, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a portfolio combining three strategies. First, we will implement a trend-following strategy, capitalizing on the upward momentum. Entry price will be $7.12, with a stop loss at $7.06, just below the support price, and a target price of $7.7, aligning with the forecast and recent resistance. Second, we will use an RSI-based strategy. When the RSI dips below 20, indicating an oversold condition, we'll enter a long position. However, given the current RSI values, this condition isn't met. Third, we'll use a Bollinger Band strategy. When the price touches the lower band, indicating a potential oversold condition, we'll enter a long position. To maximize efficiency, we'll prioritize the trend-following strategy due to the established upward trend. The RSI and Bollinger Band strategies will act as secondary confirmations. The initial portfolio allocation will be 60% to the trend-following strategy, 20% to the RSI strategy, and 20% to the Bollinger Band strategy. This portfolio will be actively managed, with adjustments made based on real-time price action and indicator signals. The stop-loss and target prices will be regularly reviewed and adjusted to protect profits and manage risk effectively. I believe this diversified approach, combining trend-following, RSI, and Bollinger Band strategies, offers a high probability of achieving substantial returns on Uniswap. Based on the historical data and forecast, Filecoin shows a volatile trend with periods of consolidation and upward movement. The RSI fluctuates between 35 and 80, indicating oversold and overbought conditions. The Bollinger Bands demonstrate periods of expansion and contraction, suggesting increased and decreased volatility. Considering the support price of $1.52 and the resistance of $2.2, the price is currently near the support level. The forecast for the next week projects a gradual increase, with prices ranging from $2.0 to $2.26. Therefore, I recommend a long position strategy with an entry price of $2, a stop-loss price of $1.52 below the support level, and a target price of $2.26 based on the forecast high. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, oversold, it signals a potential entry point. When the RSI exceeds 80, overbought, it suggests taking profits or tightening stop-loss orders. Additionally, when the price touches the lower Bollinger Band, it indicates a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. Combining these signals, I would enter a long position at $2, place a stop-loss at $1.52, and set a target price of $2.26. This strategy balances the forecast price movement with technical indicators to optimize potential returns while managing risk. Based on the historical data and forecast, plasma exhibits a downtrend, particularly evident in the recent forecast prices. The RSI consistently remains below 50, indicating a generally weak momentum. Considering the support price of $0.229 and the forecast prices trending downwards, I recommend a short position strategy. Entry price should be $0.201. The stop-loss should be set slightly above the recent high of $0.243, at $0.245, to limit potential losses if the price unexpectedly reverses. The target price should be $0.17, aligning with the lowest forecast price. This strategy leverages the anticipated downward trend, utilizing the RSI and forecast data to identify an optimal entry point and manage risk with a conservative stop-loss. To further refine this strategy, we can incorporate the Bollinger Bands. The price is consistently trading near the lower band, reinforcing the bearish outlook. I suggest a portfolio that prioritizes the short position based on the RSI and forecast, with adjustments based on the Bollinger Bands. If the price touches the lower Bollinger Band, around $0.205, while the RSI is below 30, it strengthens the short signal, potentially allowing for a slightly earlier entry at $0.203. However, if the price bounces off the lower band and shows signs of moving towards the center band, it could be a signal to tighten the stop-loss to $0.235. The target price remains at $0.17, providing a substantial return potential given the current trend. Based on the historical data and forecast, Internet Computer shows a volatile trend with periods of strong upward momentum followed by corrections. The RSI consistently exceeded 70 for a significant portion of the period, indicating overbought conditions, but has recently pulled back. The Bollinger Bands have widened, suggesting increased volatility and potential for price swings. Given the recent RSI pullback and the forecast prices hovering around $5.8 to $6.0, I recommend a moderately bullish strategy. We will enter a long position at $5.88, placing a stop-loss at $5.28 to protect against a sharp downturn. The initial target price will be $6.39, aligning with the historical resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, which is at $5.83, we will consider entering a long position with a stop-loss at $5.28 and a target price of $6.39. Conversely, if the price breaks above the upper band, we will consider taking profits or tightening our stop-loss. The portfolio will prioritize the RSI strategy, with the Bollinger Bands providing confirmation signals. This approach balances the potential for high returns with a measured risk management framework.